Dear friends of explosive crypto markets, Bitcoin's trajectory is currently being shaped by a combination of market factors, regulatory shifts, and global economic conditions. The cryptocurrency market has experienced extreme volatility, with both significant surges and declines. Bitcoin's remarkable rally in 2024 followed the halving event generated a total of 24.34 billion in inflows. This influx of capital led to a dramatic rise in Bitcoin's price, skyrocketing from 60,000 to 108,000, a 177% increase. This also pushed the total crypto market as a whole from 2.29 trillion to 3.7 trillion. However, the market's explosive growth could be a sign of overheating, signaling potential corrections as outflows increase and investor sentiment is starting to shift. As there are several forces at play, in recent months Bitcoin has been benefiting from heightened institutional interest, especially with the approval of the Bitcoin ETFs, which have opened floodgates for billions of dollars to enter the market, providing liquidity and driving the price up. The backing of ETFs, along with increasing adoption, fueled optimism about Bitcoin's long-term viability, and many have viewed Bitcoin since then as a hedge against inflation or a store of value in times of economic uncertainty. However, with the market showing signs of overextension, it has also become more clear that Bitcoin may face high volatility in the near future. In particular, the Federal Reserve's monetary policy decisions are having an outsized impact on the market. Jerome Powell, the Fed chair, recently commented on the economic outlook, signaling caution about future rate cuts. Powell lowered interest rates by 0.25%, bringing them to a range of 4.25 to 4.5%, but made it clear that further reductions would depend on substantial progress in reducing inflation. While inflation has improved since its peak in 2022, Powell noted that certain areas, such as housing costs, remain persistent. Despite some improvement, inflation is expected to remain above the Fed's 2% target until 2027, prompting many to believe that interest rates will stay high for longer than initially expected. This prolonged high interest rate environment is likely to have a negative impact on the crypto market. As interest rates become elevated, the cost of borrowing increases, reducing liquidity therefore in the market and dampening risk appetite. Investors are less likely to allocate capital to high-risk assets like Bitcoin, and safer interest-bearing assets like bonds offer more attractive returns. Additionally, higher interest rates can lead to reduced consumer spending and corporate investments, slowing overall economic growth. This tightening of financial conditions can undermine confidence in risk assets, which further pressures Bitcoin's price and makes it a more vulnerable to market corrections. This prolonged period of high rates could also hinder institutional adoption as investors seek more stable and predictable returns in traditional markets rather than the volatile crypto space. Further complicating matters, Powell recently emphasized that the law does not allow the US central bank to hold a reserve of Bitcoin. This statement underscores the Fed's position that it has no intention of participating in any government-led efforts to accumulate Bitcoin, distancing itself from the notion of a strategic reserve for the cryptocurrency. With Powell clarifying that the Fed does not see itself as a participant in Bitcoin's related strategies, it becomes increasingly clear that despite some potential figures pushing for such initiatives, the central bank is unlikely to endorse or support Bitcoin as a reserve asset. This lack of support from the Fed may contribute to the ongoing uncertainty in the crypto market, making it harder for Bitcoin to achieve the status of a stable and long-term investment asset. There's also growing uncertainty about Bitcoin's future regarding the regulatory landscape. The crypto market, which has historically faced scrutiny from regulators, may now be entering a new phase of oversight. As the Biden administration sets its sight on tightening crypto regulations, there are signs that the incoming Trump administration may chart on a different course. Trump has signaled a strong desire to embrace cryptocurrencies, even promising to make the US the crypto capital of the planet. He has nominated Paul Atkins, a former SEC commissioner known for his pro-business stance, to lead the SEC. Atkins is seen as a friendlier figure for crypto and is expected to take a more supportive approach to the industry compared to the current SEC chair, Gary Gensler, who has led aggressive enforcement actions against crypto firms. Atkins' nomination, coming after Gensler's expected departure in January, has sparked optimism among crypto advocates. Many believe that Atkins' appointment could lead to more favorable regulatory conditions for the industry. In particular, crypto enthusiasts hope that Atkins will take a less restrictive approach, easing regulatory hurdles that have caused challenges for crypto firms in the past. His pro-business stance aligns with Trump's push to create a more crypto-friendly regulatory environment. If these shifts take hold, they could provide the industry with a more conducive environment for growth. One of the most ambitious proposals that could influence Bitcoin's future is Trump's plan to create a US Bitcoin strategic reserve. This plan aims to make the US a leader in the crypto space by establishing a national stockpile of Bitcoin, which could help stabilize prices by reducing the supply of Bitcoin in circulation. The US government already holds nearly 20 billion in Bitcoin, seized during criminal investigations, and Trump has suggested halting future sales of these Bitcoins to build a permanent reserve. Some lawmakers, including Senator Cynthia Lummis, have backed the idea and even proposed the acquisition of 1 million Bitcoins to hold for at least 20 years as a means of reducing national debt. While Trump's proposed Bitcoin reserve, it could help Bitcoin's price by limiting its available supply. Critics, however, argue that it may not be the best approach, as there are concerns regarding Bitcoin's inherent volatility and the potential risks involved in such a strategy. Additionally, there are significant challenges to moving forward with such a plan. For one, the Federal Reserve has indicated that it does not have the legal authority to hold Bitcoin, and it's unlikely that a law change to enable this will be forthcoming. Furthermore, there are concerns about the long-term sustainability of such a reserve, particularly if the price of Bitcoin experiences dramatic fluctuations, or if cybersecurity issues arise. The creation of a US-based Bitcoin strategic reserve asset could help reduce Bitcoin's volatility to some degree, but it's not a guaranteed solution. Bitcoin's price has always been highly susceptible to external factors, and recent market activity suggests that this cryptocurrency is prone to extreme swings. I mean, we've seen it in the past months after the halving. It even led to investors falling into extreme greed from November 12th to December 20th, which is over a month. Moreover, the uncertainty around Bitcoin's regulatory future remains a key risk. The incoming Trump administration may push for deregulation, but regulatory clarity and investor protection are still paramount for the industry. The SEC and other agencies have yet to deliver a clear framework for how digital assets will be treated in the US. Even with Atkins likely assuming leadership of the SEC, broader systematic changes and clear regulations will be necessary to provide long-term stability to the market. Regulatory hurdles and challenges will continue to impact the crypto sector, even if the Trump administration takes a more supportive stance towards digital assets. In general, the broader political landscape also plays a crucial role in determining Bitcoin's future. Approximately 62% of US politicians now express support for cryptocurrency, signaling growing bipartisan momentum for digital asset adoption. However, this support is not universal, and there remains a significant contingent of lawmakers who are skeptical of cryptocurrencies. These politicians argue that digital assets pose risk to financial stability, and it may be used for illicit activities and lack also adequate consumer protection laws. As a result, any regulatory shift towards supporting Bitcoin and other cryptocurrencies will need to navigate significant opposition, which could delay progress. Also important to consider is that US regulatory changes typically take years to be implemented due to the complexity of the legislative process. Drafting legislation, securing votes in Congress, and gaining approval from regulatory bodies like the SEC can take anywhere from 3 to 10 years. And even if a majority of politicians support crypto, reaching a consensus on the specifics of regulatory frameworks remains a significant challenge. This prolonged process could also lead to uncertainty in the crypto space as the market struggles to gain clarity on how it will be regulated in the future. So, in total, while Bitcoin experienced historic growth, I personally believe that the market is starting to overheat. Now, highlighted by the extreme greed of investors that lasted for over a month. As I'm recording this, massive inflows occurred from ETFs. MicroStrategy also has plans to buy even more Bitcoin. However, the price seems almost unchanged, which is a bad sign. I think people are starting to become too euphoric, as while the war against crypto is over, and the industry is starting to become more friendly. Starting with Paul Atkins, the new SEC chairman, it still will take time. It will still take time for those measures to be really implemented in the market. And by the time can be done, Donald Trump may not even be president anymore. So it's still some way to go. However, let me know what you think. Do you think the crypto market, the historic bull run, is over? Or do you think it's not over, it's just a small break and it will continue? Let me know. Make sure to check out my other videos to be prepared for the future and to maximize the profits. Of course, it's not financial advice. Anything I expressed in this video is not financial advice. It's just for educational purposes only. So that's it for today. I will see you in my next video.